The international oil market remained steady after the United States President Donald Trump announced the decision to end waivers that allow some countries to buy crude oil from Iran without facing U.S. sanctions. Brent, against which Nigeria's oil is priced, has risen about 40% this year, aided primarily by production quotas by the Organization of Petroleum Exporting Countries, as well as United States sanctions on exports of crude from Iran and Venezuela. The rise in oil prices means further accretion to Nigeria's foreign exchange reserves that has remained on the rise in the recent months. The reserves currently stands at $45.07 billion as at July 1st this year. Now, earlier this year, report says that European refiners were turning to Nigeria's crude oil grades following a drop in exports from Iran after the United States sanctions on the OPEC, third biggest producer. To put this into perspective, I have an energy consultant, Charles Majomi. He now joins me via Skype from Abuja to speak more on this. Hello, Charles.
Hello, good morning, good afternoon.
Yeah, it's great to have you join us on the show, Charles. It's been a while.
Yes.
Charles, I want us to start this way, looking at the energy market. Let's do an overview of what's been happening. It's been up and down. Like many would say, the stock market also goes up and down. But what we've been seeing because of production cuts, I think that has actually sustained the market. I don't know how that comes to you.
Yeah, absolutely. I mean, production cuts are strategic interventions used often to sustain pricing in the market. Definitely the impact of America's sort of heightening heightening aggression against Iran with respect to trying to stifle its ability to sell crude oil has definitely and will continue to impact the markets, as well as obviously agreements within the OPEC arrangement as well. So definitely, I think in the near to medium term, at least, we can see a stability in market prices. I think beyond that, that's really subject to what happens with in terms of the arrangements with Iran. But at this particular time, we can't see that there's any kind of hope for a cooling off in terms of the relationship between the two main contenders, Iran and the United States.
Seems to be complicated. We have the U.S.-China issues, we have the U.S.-Iran issue, and also OPEC plus. It's all looking so complicated. Charles, looking critically at all of this and the production of shale oil by the United States, how do you see this playing out?
Well, look, shale oil has always been sort of traditionally touted as being viable at a certain cost threshold. Okay, I think, and that was rather high. In fact, in recent years, it's not that there hasn't been shale, but in recent years, shale has been constrained by the expensive nature of its extraction methodology, which is basically hydraulic fracturing. Now, of course, through research and development, that cost is coming down, which means that the threshold for viability is becoming more and more competitive with more traditional means of extracting the resource. Keep in mind also the fact that one of the main fields, the Permian field in the United States, produces sweet crude oil. So the premium that the Nigerian sweet crude oil has always kind of enjoyed on the world stage has been kind of checkmated by the appearance of this new sweet crude that's coming out of the US. What we're seeing as a result of that is a realignment of market interests. America is now becoming a net exporter of energy. We're also looking at the plays in Europe with respect to Russia supplying gas into Western Europe, and the kind of acrimony that's building around that. And I think that's largely driven by America's interest in supplying LNG to Western Europe across the Atlantic. So what I think we're seeing is a recalibration
All right, Charles, there we'll try to reconnect with Charles to still get his views on this very important topic. That's the crude oil market and what's been happening lately. A lot of issues affecting the oil markets. Don't forget, Nigeria still depends, well, largely on proceeds from crude oil. And as much as all of these issues continue to affect us globally, impact on our budget, we will definitely feel it. We know what the budget is even predicated on $60 per barrel. So at the moment, more money is coming in and reserves continue to get up, and central bank is bringing us up to speed with these figures. At the moment, it's about $45 billion talking about reserves, which is actually a good one for Nigeria at this time. All right, we'll take a break, and when we come back, I'm sure the discussion should continue, but don't go away. Business Nigeria has more for you. We're glad to have you back. Let's shift our attention away from the oil market now and look at the big one. The signing of the Continental Free Trade Agreement is no more news that Nigeria has put pen to paper. Now, we are looking towards, experts have said that Nigeria should ensure that it reaps the gains of the African Continental Free Trade Area Agreement. Economic Watch has made this known after the country signed the trade document. Yeah, my colleague sent in a report, and all they were talking about was just that Nigeria should make sure that this develops his own environment, our environment, so that we can attract investment and make sure that we don't become a dumping ground. That has been the argument. We have the population. Let's take advantage of it and get the best out of this market of 1.2 billion people. I have a partner with me now with STIRS, Michael Famoruti. He joins me via Skype to look at the positives of this agreement. Michael, good to see you.
Pleasure as always, thanks.
Yeah, let's go straight this way. Finally, we put pen to paper. Why did it take this long?
Who knows really, because you recall that a couple of years ago our chief negotiator was actually fully in support of the deal, and I think what has happened over the last 18 months or so is the executive dragging its feet and publicly showing its skepticism for the country's readiness for the deal. So setting up a committee to investigate a deal that Nigeria had played a big part of. Drafting was a bit strange. The fact that that committee took so long to come back with their findings, and that the president himself took so long to decide what to do based on those findings. And I think a lot of that process could have just been cut down. But either way, we're glad that we're finally at the place where we've signed on to the deal.
For that, I want to play the devil's advocate here now. Manufacturers in Nigeria have said this could send most of them, it could make them close shop. Actually, they're saying that they are not competitive, so they're looking at price issues. How do you see them competing with other African countries that maybe, let's say, they have better infrastructure than what we have in this part of the world?
Yeah, so I tend to agree with our local manufacturers in that if we're being honest with ourselves, based on the current status quo, most of Nigerian industry can't compete. But that's precisely why I like this agreement, because it's a case of us really exposing the inadequacies and the inefficiencies in the economy. And my hope is that as time passes, we begin to see the urgent need to invest in infrastructure and anything else that will help boost our manufacturing sector, because unless we do that, I do agree that based on the size of our consumer market, we will be a net importer as opposed to being a net exporter of these goods we're targeting.
Michael, let's also look at some of our laws. I've had an economist tell me to my face that we need to review some of our immigration laws, and some economic policies need to be tweaked for us to actually get the goodies when you're looking at the AFCFTA.
Yes, so I do think it's a political and economic issue. On the economic side, though, the evidence is clear that African countries would do better if they were more integrated, right? And that comes from how easy it is to fly from Lagos to Dakar, to how easy it is to ship or truck a product from here to Togo, right? And it's trying to understand how we can lower all those barriers, because if we do, prosperity will follow. That said, there are serious political questions to answer as to whether that aligns with the type of country that our leaders or the people want to see as well, particularly with free movement of people and that sort of thing.
Michael, while we wait for Nigeria to properly or adequately fix infrastructure, what do you now think about this Trade Act? Are we going to get anything positive on before that is fixed?
Yeah, so I think that's a very good question, because it's important to sort of understand that what we've done is sign up for an agreement that stipulates certain rules and gives certain benefits, right? But again, if the status quo continues, Nigeria is unlikely to reap too much, because if we're talking about lowering tariffs to other countries in West Africa, for example, that only applies when you're exporting products, right? But if our main exports continue to be oil and gas products, then the AFCFTA is useless on the export side, right? On the import side, we know that definitely based on the status quo and our profile, we're going to be importing quite a bit, right? So it really is up to us to see if we can leverage the opportunity and platform that this deal provides to diversify our exports and exports to other African countries, because the market gap definitely exists.
Now, before I let you go, we're almost on of course, it should be on a final note. I just talking about this export, and I remember that GOA, the Africans Growth and Opportunities Act. I know this doesn't really look the same, but a lot of trade paths seems to be on all across. What do we seem to achieve as we move on, Michael? Let's just wrap it up with that.
Yeah, so again, I think it touches on the fact that these agreements are on paper and stipulate certain guidelines and rules and benefits. Until you change your economic and export structure, you aren't actually going to benefit from them. And that's where we now need to look to as a country.
Even with all the efforts made by the NEPC and other agencies of government trying to make us look far away from oil, we seem not to still be doing very well in the non-oil export, Michael. When you look at the figures.
Definitely not. Yeah, definitely not.
Well, partner there with Stairs, Michael Famoroti. It's always a pleasure talking to you. Thank you for joining us on the show.